Hi, I'm Peter Rose, founder of Longwood Currency Trading. Look, if you're a Forex trader and you're not following the advice I'm about to give, you're going to be mad at me. That's for sure, because you're not going to want to believe it. But you're probably not as successful as you feel that you should be. And even if you are successful, you're going to have to ask yourself a question after I get done talking and explaining this stuff to you. Are you successful because you got lucky? Or are you successful because you are successful, that you understand the process of trading? That's a question that we all have to ask ourselves as we're developing the methodologies that we're trading. Hopefully this video, by the way, is not the audio isn't too bad. I'm outside today. It's a beautiful fall day in New England. The wind is blowing a fit, and hopefully my mic is not being overpowered by that. So I'm screaming into it so you hear. Look, before I get going, I want to give you an example. If you're a poker player, and everybody's played poker before, and hopefully it's not nickel dime stuff. You're not a poker player if you're playing nickel dime. You gotta play with enough money that if you walk away the table a loser, it hurts, okay? Because otherwise you're just screwing around. And it's going to be the same in currency trading. If you go into a poker game and everybody at the table has $100 and you come with 10, what do you think your success is going to be? Trying to play in that game. You're not going to be successful. And so the first thing that I'm going to tell you is that if you are trading Forex, you need to trade at 10 to 1, not 100 to 1 or 500 to 1, because that's phantom money. 500 to 1 and you get it wrong 10 pips a couple of times, you're gone, you're done. If 10 to 1, in other words, you're trading one full lot, you need $10,000 to trade one full lot. Particularly if you're in the United States, because we've got a 5% of cash value of the currency pairs. So that doesn't leave you a whole lot of runway in that $10,000. It leaves you $3,000, let's say. Well, at 10 bucks a pip, that's 300 pips. You should be able to be safely able to trade if you know what you're doing and you don't let the fucking price run a couple hundred pips against you and you get out. But how many of you do that? You know, we get into these positions where you're listening to what's going on in the Forex market, and they tell you got to have all this fundamental analysis and you got to know what the NFP is doing and blah, blah, blah. You don't. Because if you listen to that shit, you're going to get an opinion about what price should do. You're going to get on the wrong side of it. You're not going to believe that price is going to continue to move against you because the NFP and it's Tuesday, whatever that stupid shit is that's rolling around in your head at the time. And you're going to hold that, and it's going to go 100 pips against you. I guarantee it's happened to you, hasn't it? But you don't want to hear about trading at 10 to 1 because nobody you know of is trading at 10 to 1. But how many of the people that you know of are successful in trading? Now, maybe the guy that's got 8 years experience, he's trading at 500 to 1. He's doing just great. Maybe the guy who you're listening to has got 8 years experience and he's taking a $200 account to $5,000. That's great. Then maybe he takes the $5,000 account to, I don't know, $10,000 or $20,000. And then he pulls all that money out of the bank and he goes back and he starts with $500 and goes up from there. I mean, I don't know what the crazy stuff is that they're doing, but if you're trading a $200 account and building that to a couple of $1,000s and putting that in the bank every 3 months, okay, you've got $6,000 over the year. Great. Is that going to affect your livelihood? Is that going to pay for that car that you want, or is that going to give you the vacation? Is that going to pay your mortgage? It isn't, because once you start taking a $50,000 account and start trying to use those same principles that you were trading with before, or at 100 to 1 or 500 to 1 leverage, or what it is, you're going to lose the $50,000. It's gone. At some point, the risk of ruin probability is that you will lose your account. And it's unfortunate because you don't have to lose your account. You might lose 10 or 20 pips, or if you get really crazy, you might drop a 40 pip one. That hurts. The whole point in playing poker or trading is not to lose too much money. until you get a good hand. And then you push it to the center of the table. In currency trading, you're playing with serious money. If you're trying to make serious money, if you're trying to make job replacement income, which is the purpose that I work with people, they want to replace their job income, not pay their light bill. So when you're looking at what you're trying to make and you don't have a sufficient bank to do that, you're the guy with the $10 going into a poker game where everybody else has 100. That's the problem that you're making. And you're trying to take that $10 and you're trying to lever it up by bluffing or whatever the equivalent of a high leveraged Forex position would be. And what do you think the odds are that you're going to succeed doing that? So you know that when you play poker, but you don't want to believe that in your currency trading. If you went into a game with $100 and you had 4 other people at the table and they each had $100, are you going to win $400 that night? You'd say, well, no. Well, okay, I got $100. How about if I make $100? That's 100% return. What's the likelihood of that happening? Well, okay, it's pretty good unless they're cheating or whatever. But, you know, if you could walk away with $30, you make 30% on your money that day. In currency trading, it's the same thing. The reason you're trading at high leverage is because you want to take your $1,000 levered up at 500 to 1 and you want to make $10,000. Well, that's just not, it's not reasonable. It's not any more reasonable that if you had $100 and you wanted to win all 4 of the other people's $100 and walk away with $400 and make 400% return on your money. It just doesn't happen that way. I don't know why we delude ourselves into thinking that trading Forex is any different than playing poker or jumping off a high dive into an empty pool. Not only is the amount of money that you need in your bank have to be 10 to 1, not 100 or 500 to 1. It's 10 to 1. One full lot, $10,000. You want to trade 10 full lots, you trade $100,000 account. I'm sorry, that's just the way it is. Folks come to me all the time and they're trading it at 100 and 200 to 1. And they can't figure out why they're not getting ahead. You know, you've got the skills, you've got the basic understanding of the market. You're just doing the wrong thing because you're greedy. And that's okay. Greed's got its place in trading. I'm greedy. But it has to be measured. It has to be greed at the right time. Again, it's what's the problem that I got to solve? How do I solve it? But when do I do that? I want to be greedy when it's time to be greedy, but I don't want to be greedy when it's time to be fearful. And I need to know the difference in that. And the worst one of them all is I hope. I think that the price is going to come back. I'll be okay because what? The NFP came out at XYZ, the housing starts are this, it's Tuesday. Your Uncle Billy told you that that's what he's doing. He's on the long side of the position. I don't know. You have to learn how to trade it, but you have to learn these basic principles. So number 1, don't go into trading short stacked. Number 2, trade at 10 to 1. Be reasonable about that. And your number 3 thing is, don't be fucking greedy and think you're going to double your account. You're not. When you get maybe a year's experience or 3 years experience or whatever, maybe you double an account in a year. Is it possible? Sure, it's possible. You have to be reasonable then in the expectation of what your return against your risk should be. In the fast track course that I teach, it's a 6-week program, and the goal is that you should have the skills and the knowledge to get a 20% return. That's it. Because if you can't get a 20% return trading Forex, you shouldn't be trading Forex, because it's the next level up of risk over something like real estate. Okay, you want to make, I did real estate for 40 years. I was doing 20, 30% a year compounding on properties. What do you mean by that? Well, in the late 70s, I bought a building for $73,000, and 35 years later, I walked away with a check for $600,000. You do the fucking compounding on it. And then you have to also add in all the cash. It was an apartment building, so you have to add in the cash that I took out from the apartment building while I had it. But the risk is really high because I lost $1 million net worth twice during that 40-year period of time. I made the $1 million back each time, but it took me 10 years each time. But I understood those risks and I knew how to manage it. So I made the $1 million back each time and was able to retire. I did okay. All right. So in currency trading, if you can't make a 20 or 30% return, you shouldn't be doing it because it's more risky than the real estate. If you don't like risk at all, then take your money and buy a CD or do T-bills. That's non-risk. You're 4% on a 10-year, okay? And then what do you do after that? Oh, I don't know. You got to trade cars. You got to do real estate. You got to take on more risk. And what's the next thing up from that? Yeah, currency trading. So if you can't make more from your currency trading than you can in real estate, you ought to go back and do real estate. But learning how to do real estate is really difficult to do. There's so much you need to learn how to do. If you want to look at currency market realistically as a retail trader, not as an investment fucking banker or a hedge fund manager, as a retail trader, you don't have to know anything except the process of how you put the rules together in order to be successful. And if you can learn how to do that, then 20 to 30% returns should be, that's the start that you want to start from. I've got the math that I can show how you get from that 20, 30% level to 40 to 60% level to 80 and then to 120% on a yearly basis. But you have to have some experience, and you can't be stupid shit. You can't be taking risks that you can't write a check for at the end of the day. If you lose 50% of your money, you've got to make 100% of the money back just to get even. These are things that I talk to people about, and they don't listen to me. But they're really, really, really critical. I hate to be getting animated here, but I'm getting cold out here. And I can't go inside today because the dog is upset about something and he's barking. And I can't even think. But you have to at least be playing by a set of rules, a set of base rules. You don't come short stacked to the table. That's number one. God damn. You don't go in with high leverage. You just don't. You look for a reasonable return on your money. What's reasonable in the beginning? 20 to 30%. That's good. Shoot for that. If you take the fast track course, all the stuff is geared to get you to that level. Consistently profitable at the 20 to 30% return against a $1,000 bank. So that if you lose $400 or $500 as you're learning, you can reload that and continue on until you get consistent. And then when we get to the end of the course, if you've passed all the guidelines and all this stuff, you graduate to a $10,000 account, and we work with you on that. Can you make 20% against a $1,000 account? It's $200. That's not going to change your life. 20% against a $10,000 account is $2,000. 30% against it is $3,000 a year. That is a significant amount of money. If you have a $60,000 a year job and you have a $3,000 trading income that you can pull out of that, that's a 5% increase in what you're making in your job. Is your boss going to give you a 5% increase? No, he's not. But it would be relatively simple to get those kinds of returns. So if you could get a significant impact against your job income at a 20 or 30% supposedly easy return, and then learn how to tweak that a little bit, and we show you that stuff in the fast track program, why wouldn't you be able to jump your return to 60%? Now maybe that might be the ceiling for you. Might be a 60% return. Where the fuck are you going to get 60% unless you're wrenching on cars and flipping them out, or you're doing real estate and flipping real estate? where are you going to get those kinds of returns? Who can show you the math that would guarantee you that if they're trading stocks or commodities or anything else? You can't do the math because the markets don't allow you to do the solution set to the problems that are presented in the correct probabilistic manner. In the currency market, because it's $7.5 trillion a day, and there's stability within all that chaos and complexity that allows the retail trader to be able to take advantage of that to a higher degree than the institutional traders can. The institutional traders are making a shithouse full of more money, but we don't have to play by their games. And from a percentage return, we should be able to get a larger percent. They make more money on a same kind of percent that we may get because they have more money. So there's your next rule, is if you want to play in the tall weeds with the big boys, instead of a $10,000 account, you play with a $100,000 account. Oh, you'll never have $100,000. Sure, you'll have $100,000. You don't buy a fucking $70,000 truck. Come on. I don't have any sympathy for somebody that says like they can't afford to put the reasonable amount of money in their account. You know, if you want to trade stocks in the United States, you're going to trade more than 7 times a month or something like that. You're called a pattern day trader, and you must have a $25,000 bank. You must, or you're not allowed to trade stocks. How many hundreds of thousands of people are coming up with $25,000 to trade stocks on stupid shit, where the risk is so much higher without the mitigation ability that we have? Do you know that if you get into a stock, you may not be able to get out? The market may be too thin. You get into a commodity, you're trading pork bellies or Kansas City wheat, and there's a lock limit, and you're caught. 3 lock limits, and you lose your fucking house. In currencies, you could get out anytime. Well, you might not be able to get out if you're trading the Thailand currency against, I don't know, New Zealand or something. Well, that's a thin market. So you may not be able to get out. But you trade this, one of the 6 major pairs. They're all USD based. Euro USD and pound dollar represent 85% of the $7.5 trillion a day market. Those are huge markets. You get out anytime you want. Get in anytime you want. You have control. The only thing you don't have control over is how much you're going to win. If you get into a trade and it doesn't do what you want it to do, you get out and you take a small loss. You do that 3 or 4 times, that's a lot better than letting the price run 50 to 80 pips against you. You are the one that's in control. And so 80% returns are reasonable. That's just stupid to say, but they are. I can prove it mathematically through the probability of the market itself, the complexity of the market. If you can prove things mathematically, then you should be able to execute them in real time. Einstein came out with his theory about the speed of light. Nobody could prove it, but he said it's work. That's what it is. Until Michelson and Morley came around and said, oh, yep, we've proved it. So, you know, you're going to have to figure out who knows what they're talking about and take a course or listen to them and put your risk management into the proper structure so that you can win. And don't get mad at me for telling you what that proper structure is, because I'm going back in, I'm cold, and I'm going to check the market and see what's going on. I got a trade running and I'm not happy with it, so I may just cut it. But that's my choice. Cut it or let it run. That's the position you'd like to be in. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.